Cheers, folks. What a time it has been the past 2 years. It has been fun times, right? I want to say congratulations to everybody that has been making a whole lot of money over the past 2 years. I know a lot of you guys have made a fortune this past couple years. It's been amazing to see the public count go from $1 million to $3 million plus. It's been a tremendous past couple years here, and I know you guys always root for me, and I always root for you guys, and I love seeing all the screenshots you guys posting of your accounts hitting all-time highs over the last couple of years. That's been amazing. So, yeah, smash a thumbs up for yourself here today, guys. Congratulations to everybody that's been participating amongst all the drama that's always out there in the market to say, get out of the market, right? But here we are. We're at a moment right now. We're at a moment where we're trying to figure out, like that one movie, are those mountains? Or wait, is that a wave coming right toward us, right? You know what movie I'm talking about there? That's a moment we're in the market right now, right? And the reason being is over this next 2-week span, we got an incredible onslaught of earnings coming straight at us, right? And we're going to find out very quickly, is that a wave coming at us, or is that just a mountain that we need to climb over? So what I thought we'd do today in this video is I'm going to go through all of my stocks and give you my earnings predictions for all of these companies and give you my price predictions for where these stock prices are at after they report earnings. So we're going to talk Sofi, Cake, Nike, Revolve, Shopify, Amazon, Wynn, Palantir, Estee Lauder, AMD, Meta, Monster, Tesla, The Planet, Celsius, PayPal, Fubo, Elf on a Shelf, which I know a lot of you guys have been wanting me to talk about, Honest, and Avant. We're going to speak about all of those stocks. We're going to go through earnings predictions for all of them and price predictions for all of them here today. So it's going to be an action-packed video. And I thought I would show you this graphic here at the top of the video before we get into all that. 7 2X's from a lifetime of changes to your life, right? It's just amazing to see it like that, because a 2X is not crazy. Like if you get a 10X in the market or a 20X, like that's beast, right? And I've got several of those stocks, but to get a 2X is not hard. I would say that in the market, especially if you're investing over 30, 40, 50, 60 years, to get 2X's is nothing, right? And it's amazing to think just 7 of those over your lifetime is an absolute game changer. Now, if you can put together 10 2X's, 15, 20 over a lifetime, woo-wee! I appreciate you guys joining me as always. Thank you so much for being here. All I need from you guys, one thing only. I need for you to take 1 second. I hope this isn't too much to ask, and smash that like button on this video. And if you want to be subscribed here to the channel and you haven't subscribed, you can feel free to hit that subscribe button. I know it takes a little bit of energy to do it. I appreciate y'all being here as always, right? If you're looking to access all my best courses, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, access to my private Discord chat, 6 and 7 figure communities, the research platform, 1000X Stocks, pin comment down there, click on that, fill out a form. We'll see if we get you access to all that in the next week or so, okay? Alrighty, let's get started here with Sofi. So, Sofi, what's my prediction here? Well, here's what we're looking at here in regards to Sofi Technologies. Sofi Technologies has 4 straight double beats. You always want to focus, like, is a company consistently beating their earnings per share and beating their revenues? Now, if you can consistently beat your earnings per share and you can consistently beat your revenue, I can tell you guys there's a high probability your stock's going to go beast. And if you look at Sofi stock, certainly in the last 6 months, what has it done? It's been an absolute animal. And the reason being is Sofi has now become a company that people are very confident they're going to come in with double beats quarter in and quarter out, right? Which you couldn't have said in the past. Like, for instance, right here in the third quarter of 2023, they actually had a 21-cent miss their earnings per share. Here they just basically met their expectations, right? If investors want to see you come in and beat numbers quarter after quarter after quarter, and if you do that, your stock will be rewarded very, very handsomely. Now, in my opinion here, here's what the expectations are for this quarter and next quarter. So analysts are expecting 4-cent EPS for this particular quarter. Keep in mind, last quarter they did 5 cents, right? Bag. This is in the bag, in my opinion. That's an easy beat, right? Easy, at least a meet, if not a beat there. As far as next quarter, 6 cents, same exact thing. That's an easy meet or beat there. So I'm not even concerned about misses at all on earnings per share. That should be easy peasy lemon squeezy. As far as revenue goes, they have about 14% growth for this current quarter they're in. Once again, that's in the bag, in my opinion. Like, Easy peasy lemon squeezy. Next quarter is a little more difficult, but I do think they'll beat as far as that goes, if they give any guidance as far as that goes. About 22% growth year over year. The reason I'm feeling pretty darn confident in that beat for next quarter is really because I'm expecting quite a big beat here in this current quarter. So as long as they beat in this current quarter very nicely, next quarter should be, like I said, easy to go over 707 there. No, I thought this is something I'd show you guys here on 1000xstocks.com, right? Look at that. Look at that revenue growth over time, and look what's expected here for Sofi. I mean, that's the sort of company people are going to want to own more and more of. Like, at the end of the day, if you're a company and you can be trusted to come in and beat your earnings per share quarter after quarter after quarter, come in and beat your analyst expectations for revenue quarter after quarter after quarter, right? And you just consistently put up great growth year in and year out, everybody's going to want to own you. Like, it's as simple as that, man. It's a very simple game. Like, that's just, you got to remember, when investing, we can talk about PE ratios, forward Ps, all that stuff we always talk about, right? But at the end of the day, people are putting their hard-earned money into a stock, right? And they've got to have trust. And trust comes back to a lot of these things that are important, like coming in, beating your expectations, not missing expectations, not disappointing people, right? Coming in quarter in and quarter out. That's how trust is built, and that's where people feel comfortable putting their money into a stock, right? Now, as far as Sofi, if they come in and quad beat, I think the stock's going over $20 after earnings. If they miss, I think the stock's probably going down to like a $14 to $15 range. But I think this is a much higher probability than this, right? And as a Sofi shareholder that's up 148%, doesn't even really matter. Like, send the stock down. I would rather have the stock down. I'd rather buy some more shares here at this one, right? Than not. Alrighty, next one up here, Cheesecake Factory. So, what am I expecting here with cake? And what's my price prediction? Well, here's the deal with cake. 2 of the past 4 quarters have been double beats for this company, right? But it's inconsistent. Here's the deal. They missed very slightly. I mean, this is a teeny miss. $600,000 for companies this size is like nothing, right? But at the end of the day, it's still technically a miss. The previous quarter, they missed by $5 million, right? These 2 quarters, they beat on earnings per share and beat on revenue. So, it's inconsistent. I think that's part of the reason the stock doesn't have a much bigger valuation than it has right now, because people don't have as much trust that they're going to come in and beat their numbers. Now, here's what I'm expecting, at least for this quarter and next quarter. 91 cents expected in the bag, in my opinion. That's easy peasy lemon squeezy. 87 cents in the bag for the next quarter as well. As far as revenue growth goes, only 4% and about 4.7%. I think this holiday season was really good for the restaurants. Now, we could be talking about potentially got to remember there's a lot of Cheesecake Factories in Los Angeles, a lot in Southern California. Could that affect the numbers negatively? For this upcoming quarter, it's a potential, but at the end of the day, I think even with that, I think they will come in and beat numbers. They got menu price increases, right? Restaurant sales should be good. Consumers getting in a better spot. Confidence is improved a bit versus last year, right? You have a lot of, and then obviously Flower Child growth, North Italia growth. I think they can beat across the board there, right? And something that gives me confidence here, especially in regards to bottom lines, look at last quarter. Last quarter they only they only had revenue growth of about 4%, right? But here's the deal. They had diluted EPS growth, right, of 65%. So the moral of the story is Cake's getting their bottom line in a great place right now. The story's not nearly as much about top line, it's much more about bottom line. So where do I expect, and by the way, why is that happening? Well, they don't have inflation slicing and dicing them. Wages are in a normalized place now as far as wage increases go. As far as menu price increases, like they caught up there. They're not dealing with all the commodities, crazy inflation that they were back in 2022 and even 2023 to a certain extent. So that's why they've been able to get their earnings per share back in a really, really good place here, right? Now, as far as Cheesecake Factory, where's the stock price going? I think if they quad beat, which I think they're going to do, I think we're going 55 plus after earnings here, right? Now, this is another one that I'm actively still buying, even though I've been buying it here for a little bit of time. I'm already up 34,000. That does not include dividends I've received in this one. But yeah, I have a feeling we're probably going over 55 after earnings, but I hope we don't. Okay. Alrighty, next one up here, Nike. So here's the deal in regards to Nike. This company just reported, they reported a weird time. Like almost all the companies we're going to be going through here today are reporting over the next few weeks here. Nike is a freak company where they report way either late or early in the next earnings season, right? And so they've just reported earnings a little over a month ago on December 19th, right? And when they reported their earnings per share was 78 cents. They beat by 15 cents. Revenue came in at $12.35 billion for the quarter. That was a $240 million beat. And it just cracks me up because that's like a rough time for Nike, right? And it's just like any other apparel company basically in the world would gladly switch spots with Nike in a hot second. Like, it's just fascinating to see that, right? So as far as Nike goes, I don't have numbers yet and kind of what I'm expecting and whatnot yet. It's way too early in regards to Nike. I'll have those a little later on, right? Revolve, next one up here, RVLV, the fourth stock up here. So when it comes to Revolve, 3 of the past 4 quarters have been a double beat. They did have one miss on revenue a couple, 3 quarters ago essentially, and it was a $1 million miss on revenue, which is once again not a very big number as far as that goes. Now, as far as this company, I think as far as this quarter they're about to report, I think it was a very good holiday season. Everything I've seen out there for numbers so far and whatnot, I think it was a good holiday shopping season. I think this EPS is in the bag. I think that's in the bag, and then the revenue numbers in the bag as well. Easy peasy lemon squeezy. Now, where I'm not sure about is kind of the March quarter. As far as guidance there, I'm not really sure. I can't tell you I'm confident in anything as far as that goes, right? We have a lot of moving parts here, so I'm not really sure. As far as price prediction on Revolve, I wouldn't be surprised if it's $25 after earnings. I wouldn't be surprised if it's $40 after earnings. The stock does perform very well for me, 144% gain. And at the end of the day, they just have the right trends, right? E-commerce related, clothing related, selling to a little bit higher end customer base, average order volumes $300-ish, right? They're just in a really good spot for the long term. But in terms of predicting quarter in and quarter out what their numbers are, I think it's really, really difficult. But like I said, as far as this last quarter goes, I'm feeling very, very confident about that. That's in the bag, okay? Next one up here, Shopify. So Shopify is not a stock I own in the public account, but I do in my Patreon portfolio. And I wouldn't mind owning it in the public account as well. $106 stock as of right now. So what's going on here with Shopify? Well, here's the deal. 4 double beats for this quarter. Back to back to back to back. Double beats for this quarter now at this point in time. Actually, technically, it's been 8 beats, but we really focus in on the last 4 quarters, right? But it's really been 8 quarters in a row. So 10-cent beat, 4-cent beat, 3-cent beat, 6-cent beat. As far as revenue beats, 44 million, 70 million, 13 million, 33 million. So Shopify is clearly a company that you can count on coming in and beating their numbers, right? Here's the deal. Bag. They got all these numbers in the bag. Earnings per share, 43 cents in the bag, in my opinion. Next quarter, 28 cents is in the bag, in my opinion. $2.73 billion, 27% growth. I think that's in the bag, but I don't think that's going to be a huge beat. But I do think they're going to easily beat that next quarter number of 24% revenue growth as well. So across the board, easy, man. Quad beat, I think the stock goes 120. This is a position I have in the Patreon portfolio, up 65% on this now at this point in time. Keep in mind, even if it goes to 120, the stock's still way off 2021 highs. Let me also be very crystal clear about Shopify. If it goes down on earnings for any reason, that's a great buying opportunity for anybody that's looking to add a Shopify position. No dang doubt about that, right? By the way, if you ever want to join my Patreon, support my content, plus get access to see the stocks I'm buying and selling each week, you can always join there. It's in the description area of all my videos, including this video here today, right? That is very different than my private group. This is more if you just want a fan, you want to see what stocks I'm buying and selling each week, right? You can join there. My private group is much different. My private group is if you want to learn everything I got up here. If you want me to teach you everything about this game, that's my private group. If you're more of just a fan and you just want to see what I'm actively buying and selling with screenshots each week, then this is a thing to join, okay? So they're 2 kind of different purposes, and I just want to kind of explain that to everybody out there, right? Next one up here, Amazon stock. So, Amazon, here we go. 3 of the past 4 quarters, double beats, right? 3 of the past 4. The only one they missed on was right here, second quarter. They had a $780 million miss as far as that went, right? But I mean, some of these beats, guys, have been substantial. A $3.7 billion beat, $750 million beat, $1.59 billion beat. So when Amazon comes through with a beat, it's like massive, right? It's like, what just happened? Like they beat by over $1 billion. It's a big number. As far as earnings per share goes, look at how much they've been beating their earnings per share by. 20 cents, 15 cents, 24 cents, 29 cents. That means quarter in and quarter out, this company's basically getting to much more profitable area than anybody had anticipated, right? Any of the analysts at least had anticipated. Now, as far as this quarter goes, this December quarter, keep in mind holiday shopping season, so e-commerce is definitely boosted during this time. AWS puts up their numbers consistent quarter in and quarter out, right? And do also keep in mind, Amazon's gotten a lot bigger in the advertising business. Now they've kind of become the third giant in advertising behind Meta and Google. So that could definitely be positively affected, certainly in the October, November, December quarter that we're about to be reported. And the reason being is it was election time plus holiday shopping season, right? So the moral of the story is bags, baby. $1.48 earnings per share. Come on, man. Like, don't be surprised if they come in with a number close to 2. Don't be surprised. 139 for the following quarter. Come on, man. Those numbers are in the bag, in my opinion. And then these are in the bag. Analysts are only at 10%. 10% revenue growth for this quarter they're about to report, and 10% next quarter. I'm like, what are you guys looking at? The e-commerce business alone is going to have incredible growth. We know AWS has double-digit growth, and the advertising business is growing faster than both. Come on. Bags, baby. Bags. Oh my gosh. Amazon, you'll be flipping my flapjacks. Look at their latest quarter they had reported, right? It was an A-plus quarter. I grade these income statements in my private stock group, right? And I post them for you guys, and I grade them. This is an A-plus, A-minus, so everybody can learn, like, how to grade income statements, if it's good, if it's bad, all those sorts of things, right? Incredible. It was an A-plus quarter. Like, what are we doing here? What are we doing, right? They grew revenue from $143 billion to $158 billion, right? Analysts for this quarter, they're about to report here at 187 for the Christmas quarter, right? Easy peasy, lemon squeezy. $1.43 a diluted EPS. Give me a break, man. And here's the other thing with Amazon. You always want to wonder, why does this company command such a big valuation? The reason being is it's a beast, man. How many companies can you count on growing like this, quarter in and quarter out, coming through with great growth, right? Double-digit growth. Like, Amazon's going to grow double digits for years to go in the future. And the best thing is, look at the earnings per share growth really over the past year or so, year to year and a half. I mean, it's incredible, and this is not going to stop, right? They're going to keep spending on AI chips and all that stuff, but at the end of the day, in CapEx to build out AWS bigger and bigger, and obviously they'll always spend money on their e-commerce side of the business, but dude, like, they have so much room for margin expansion and earnings per share expansion over this next decade. It's going to be a fun time, right? So where's Amazon after earnings? My guess is 250 plus. If it dips at all on earnings, buy the dip, man. It's just one of those beast companies. Amazon's been a buy every day since it went IPO, and it remains to be true to this day. It's still a buy, and it's a buy before earnings. Here's the deal. Amazon, it's a buy before earnings. It's a buy after earnings. And that's regardless what happens with the stock. If the stock's at 230 after earnings, it's a buy. If it's at 210, it's a buy. If it's at 250, it doesn't matter. Because Amazon's likely going to be not even a question if it's going to be a $5 trillion company, but it's likely going to be a $10 trillion company someday. So when we're talking about $10 trillion plus company, it's a buy today. It was a buy yesterday. It was a buy the day before. It was a buy the last year, the year before, every year. Like, give me a break, man. It's Amazon, right? Someday Amazon won't be a buy, but it's not in this decade. Maybe after 2030, maybe we can start to have that debate. Maybe 2040, we can have that debate. But not in this decade. Not in the 2020s. No. Okay. Next one up here. Wynn Resorts. So, Wynn Resorts. 2 of the past 4 quarters have been a double miss for this company. I think this is part of the reason the stock has, certainly lagged. That along with interest rates, right? But they missed 7 cents there, 20-cent miss there, $34 million miss there, $10 million miss there for Wynn Resorts. Now, I don't have much confidence in kind of predicting the numbers. And the reason being is, you got to understand, with Wynn's business, they're super high end. We know that, right? F1, I've got a lot of conflicting things I've heard about F1. And that's going to be in the quarter they're about to report here, because that was in November, right? I've heard F1 was dead. I've also heard, like, the big ballers still showed up for F1. It might have just been some of the more general audience wasn't there for F1. I don't know what to believe. And so for that, like, it's hard for me to predict where revenues are going to be in earnings per share, because I don't know how much is true about, like, the big ballers still showed up or they didn't show up, right? And you got to understand, for Wynn in a quarter, 10, 20, 30 customers could literally be the difference between Wynn beating numbers and missing numbers. I'm not kidding you, because you got to understand, those top tier customers at Wynn, when they come to Wynn for a weekend, they're gambling through millions of dollars, sometimes 8 figures in a weekend. Why? Because they got 9-figure net worths, 10-figure net worths, and sometimes more. Like, they have so much, some of these folks that come in to Wynn, they have so much money, it's like, it's nothing to them, right? To come through with a $5 million gaming budget for a weekend, That's nothing for them. And so you got to understand, 10, 20, 30 customers could be the difference between them beating and missing, right? And then in the upcoming quarter, Super Bowl. We had Super Bowl last year in Vegas, and that brought a lot of big money to Vegas. So I just don't know, what the short-term numbers are going to be in regards to Wynn. It's a really, really, really hard prediction here, right? And so at the end of the day, when it comes to Wynn, I just can't predict that one, right? Palantir. By the way, Wynn's a steal deal here. Anybody that's got a longer-term horizon here, it's a buy. Palantir. Let's talk about Palantir here. So Palantir, here's the deal. 2 of the past 4 quarters have been, guess what? Double beats for the company. But that's 2 of 4. Here's the problem. They only met numbers here as far as EPS and only met numbers there, right? Now they beat by 1 cent there, beat by 1 cent there, right? And consistent revenue beats, which has been very good to see. Now, when it comes to Palantir, here's my thought process. They got this quarter and next quarter in the bag as far as meets and beats likely, right, for earnings per share. 11 cents expected. I have no worries at all about them beating that number and meeting that number, right? Same thing next quarter. I mean, that March quarter is probably, my guess is worst case scenario 12 cents for that March quarter, but probably more toward 14 cents for that March quarter, right? As far as revenue goes, 27% for this quarter that they're about to report, and then 25%. The reason I kind of chuckle when I say that is I just I can't imagine Palantir growing less than 30% for those quarters. That's impossible for me to wrap my head around. If they do grow less than 30% for those quarters, let me be very clear, the stock's going to get hammered. There's no way Palantir can say we're going to only have 25% revenue growth next quarter and the stock doesn't get hammered, given where the valuation is trading at right now. We're pricing in way better growth than that. And so I laugh because I'm how these aren't something at least with a 3 in front of it is mind-blowing to me. But let me be very clear about Palantir. Here's the deal. There's rumors, there's thoughts about this company's going to get to 40% plus revenue growth this year, right? If the company reports a 40% plus revenue growth this last quarter or for the upcoming quarter, I think we're going back to $80 plus. However, if, let's say, the company only reports 30% revenue growth, and certainly if it's something with a 2 in front of it, whether it's for this quarter or next quarter, I think we're going down to $60 to $70, maybe even lower than that, if that was to happen. Let me just be very crystal clear. Palantir, if you run the numbers, you run the projections, right? And we got the projections tool on 1000xstocks.com. If you run the numbers and run the projections, if Palantir is only growing 20-something% revenue, the stock is a massive ripoff here. But the whole game changes if we're talking about Palantir's growing revenues 40%, 45%, 50%, that completely changes the numbers and the math around Palantir at all. And you start to be able to say, hey, it's actually not a bad deal here, right? And so that's why if you want continued momentum in Palantir, we got to come through with the big dog numbers. We can't come through with something with a 2 in front of it. If we come through with a 2, it's hard to see the stock not crashing, man. Very hard to see the stock not crashing because it's just going to prove I think it would prove it's a bubble, as far as the stock price goes. It would prove it's a bubble if we come through with a 2. We can't come through with a 20-something% revenue growth, not trading at the valuation we're trading at, not trading at the forward P, we're trading at even the 2-year forward P, right? No, next one up here, Estee Lauder, EL. This one's a turnaround play. It's in a CEO transition and management transition time period right now, so I think it's a really hard one to gauge where the numbers are going to be at short term here. Really, really hard. So far I'm up $5,500 in the stock, up about 9%. That does not include dividends. I would honestly prefer if the stock went down because you got to understand the bet for Estee Lauder is really a bet around their brands. Their brands are so phenomenal in the beauty industry that, the CEO transition, the numbers have been rough last year. I don't care about any of that. All I know is I'm getting the brands at a massive discount right now, right? And so I would prefer the stock to go down. If it doesn't go down, it is what it is. But I also wouldn't be surprised. Here's the thing, okay? Here's the thing everybody wants to understand. If you want to know about a stock that could pop massive on earnings, you're looking at it right there. If they have anything decent, the stock's going to 100 plus after earnings. If they got anything decent, you understand this stock is so beaten down. Wall Street loves this stock deep down. They haven't loved it the last couple of years, but if you look at the long-term history of Estee Lauder, Wall Street actually loves this stock. It is the prized possession in the makeup beauty space in the sector, right? Cosmetic sector, it is the prize jewel. It is the one that Wall Street's always loved the most. They've always been willing to pay big valuations for this company. They've hated it the last 2 years. We all know that, right? But if they have anything decent here, the stock's going 100 plus. It will make such a big pop. People will be like, what? And it's not even about the numbers. It doesn't even matter if the numbers are great or bad or blah, 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 blah. All that matters is the conference call's a banger. They just clearly have a vision. Like they have a they clearly state like, here's our margins are going to move up as the year goes along. Our revenue is going to get back up. Net income, $100 plus after earnings. It'll happen like that, right? So we'll see. But that's the dealio as far as Estee Lauder goes. Next one up here, AMD. Already, AMD. So, 2 of the past 4 quarters have been double beats for AMD, right? Here they just met EPS, and here they just met EPS. As far as revenue goes, beats and beats and beats and beats for AMD. Now, and by the way, Lisa Su's got a pretty good track record of beating numbers over the years. I'll tell you that. Like, I would say my opinion is, my estimated guess, let's call it that. My estimated guess would Lisa Su probably comes in and beats numbers 80 to 90% of the time. Like she's pretty darn impressive, and that management team's pretty impressive at AMD. Bag. Earnings per share, $1.09, 95 cents for the following quarter. That's in the bag, in my opinion. As far as revenue goes, 22% and 28%. I think that's in the bag as well. I have no disbelief that they're going to hit those numbers. No disbelief at all. So as far as if they come in and quad beat and the conference call is good, right? What does a good conference call mean for AMD? It's Lisa Su basically talking about being an endless demand for them for not just this year, but for years to go in the future. If Wall Street can really start to understand, like AMD has just incredible demand for years to go in the future. This isn't just a 1-year AI chip hype cycle or something like that. Like this is a multi-year massive demand trend where the TAM's going to increase rapidly and AMD is going to be able to take market share in several spaces. I think we're going 140 plus after earnings. My hope is the stock stays in the 120s or under. Why is that? Well, because I'm an active buyer of AMD. I got so many stocks I'm up so much money on. I don't need another stock to make myself feel good. I want to buy AMD for as cheap as possible. If you told me, would I rather have AMD at $100 after earnings or 140? 100%. I'd much rather have it at $100. I'd buy a lot more shares. With that being said, I think there's much more upside risk to the stock than downside risk. And that's why I've been buying the stock so aggressively. I made it a goal. I said, in my head, I got to have at least $100,000 in the stock in the public account alone before they report earnings. And that's exactly what I've done. That's exactly how I've executed to make sure got at least 6 figures in the stock before their earnings come out. And I'm there, right? And I have AMD and other portfolios as well. My hope is it goes down, but that's just hope. My thought is it's probably going higher and quite a bit higher after their earnings come out, okay? Next one up here, Meta. Oh boy, okay, we're talking about big dog here, right? If you've been following me for years, which, hey, thank you. Thank you for everybody that's been, thank you everybody's been supporting me for years and years and years on the channel. I appreciate every single one of you. You know Meta's always been a stock I've loved. You know I bought it on and off for years, right? Now sitting on an $858,000 gain, does not include dividends, does not include all the profits I've taken in Meta stock over time, right? I love Meta stock. It's a beast. They've been executing exactly how I thought they would execute. Everything's been going perfect, right? If you guys got to watch this video, it looks like about 169,000 of you guys have gotten to watch this video so far. 6 stocks to buy and hold forever. What did I say in that video? I laid it all out for you guys. I said, Meta's one of those stocks you buy and you hold that thing forever. In Meta's, I might cash shares here and there on Meta, but at the end of the day, I've got to always hold a massive position in Meta. Until I ever see Facebook and Instagram and WhatsApp and Threads and all the other products and services be irrelevant and Zuckerberg leave the company, until that day, it's one you just have to hold, man. It's one you have to hold. 4 straight double beats for this quarter, for this company. And here's the thing. Their beats are not small. $940 million beat, $231 million beat, $760, $159 million beat. But look at the earnings per share beats. 36 cents, 35 cents, 38 cents, 73 cents. That last quarter was a shocker, right? 73 cents is 603 EPS in that last quarter. So here's the deal. Oh my gosh. It's in the bag. It's in the bag. 674 is what analysts have. Like, I think the company's going to be doing an earnings per share of between $7 and $8 for this last quarter. 674? I think they're way low. I think $7 to $8. So I think the analysts are going to be wrong again, and the company's going to come and smash it. And then the March quarter, 539. I think the company's done with the fives. I think the earnings per share is going to keep coming in at sixes and above, even in the weaker quarters for the company now at this point in time. So I'm looking at what analysts have here, and I'm just like, you got, like, did they not learn? Like, they've been off by a mile. Did they not learn already? I guess not. As far as revenue goes, 17%, that's in the bag in my opinion. And then come on, 14.5% for the next quarter, that's super bag. Give me a break, man. Like this quarter they're about to report, their revenue growth will probably be, my guess is 18 to 21%, somewhere in that range. And the next quarter they'll probably do somewhere between 17 and 18%. And analysts have 14.5%. What? What is going on here, man? I'm going to be flipping my flapjacks. So here's the deal. If they come in quad beat, but the company does have to do one other thing. Let me be very crystal clear about this. CapEx is going to be very important. How much are they spending on all those NVIDIA chips in 2025? And the companies are likely going to give a very specific guidance range for that. If the company comes in quad beats and has a CapEx roughly around what Wall Street was expecting, we're going 700 plus after earnings. If, for any reason though, let's say there's a dynamic where company beats, great, but their CapEx is way above where Wall Street's at, and Wall Street's like, ooh, Meta, their spending's getting out of control again, it's going to be 2022 all over again. That would be a situation where maybe we go under 600 and go back down to that 500 range, which then I think the stock would still end up getting bought right back up the following weeks and months after that, by the way. But, you know, I think we're going 700 plus. I think we're going 700 plus. It's been such a beast stock for me. And I think at the end of the day, like, you just run the math, you run the numbers on this, and this stock will be $1,000 plus within the next 24 months. And the stock will be $2,000 plus before 2030. Like, it's just a number. You just run the revenue growth and net income growth in a realistic PE range. You could do that on 1000xstocks.com, right? Run your projections, and we're 2,000 plus before 2030. And we're 1,000 plus within the next 24 months. So, regardless of whatever happens, like, let me just be honest. If the stock, for whatever reason, dips, it's kind of like an Amazon situation where it's just an easy buy the dip opportunity, right? Now, the other great thing for Meta is evaluation. You look at their forward P, it's at around 25. Keep in mind, analysts are off by a mile in regards to Meta. So this is taking analyst expectations into account, which analyst expectations are going to be far too low. Company's going to come in with way better earnings per share. So the forward P on Meta is probably a reality number. 20 to 22, right? Apple's at around 30 and Microsoft's at 33. But here's the deal. Meta's going to likely have way better revenue growth and earnings per share growth over the next 5-10 years than those two companies. So Meta should be trading at a far bigger premium than these two stocks. So if you're wondering, could Meta hit $1,000 this year? It's possible. If they come in with great numbers all year, CapEx is realistic range, right? You could get this stock to $1,000 plus based upon valuation alone this year. Keep that in mind. Keep that in mind, right? Now, as far as my end of year price prediction for Meta, I actually did that on X today. I don't know if you guys follow me on X, but I linked that in the description down there. So if you use X and you want to follow me on there, it's always linked in the description area. I actually went into my end of 2025 price target for Meta stock here today, okay? Alrighty, next up here, Monster. I have no opinion on Monster. This is kind of the weaker time period for them, winter time. No real opinion on them. And Monster's is a solid, great company. I've owned it in the past, and I owned it back in the day when it was like a game-changing stock, right? And made some ridiculous gains on Monster way back in the day. We're talking like 10 plus years ago. Nowadays, Monster's just a consistent beast company, and I use it as a hedge for Celsius, right? Which is a stock I've been buying here recently, and we'll talk about Celsius in just a moment. Tesla, my Tesla. Alrighty, here's the deal in regards to Tesla. It's been nasty. I mean, you look at the past 4 quarters, and what do we see? They've missed at least revenue or earnings per share every quarter of the last 4 quarters. That's a 4 for 4 in the wrong direction, right? Messy. There's no, debating that. No. Additionally, as far as this quarter goes, next quarter, it's so hard for me to project Tesla right now because there's so many moving parts with this one, no pun intended, that I actually don't even feel comfortable doing an earnings per share prediction or a revenue prediction. And that's very different, because I can tell you in past years, I always had a lot of confidence when Tesla was going to report their earnings per share, the revenue, like it's going to be around roughly this number. And I was usually pretty dang accurate as far as that goes. Right now, I just don't have, I got to be honest with you, I don't have any confidence whatsoever in modeling out or predicting short-term numbers in regards to Tesla. I just don't right now. But let me be very clear. The numbers are irrelevant to Tesla in the short term. If if it was about the numbers, Tesla wouldn't be trading $400 plus right now. The company's had at least one miss in the past 4 quarters, right? So if it was just about the numbers, I can tell you this stock would not be trading $400 plus right now. It would not. It's all about the conference call. What does Elon have to say about robo-taxis and getting those babies out there this year? What does Elon have to say about Optimus? What does Elon have to say about the energy side of the business? That's what it's all about. The conference call. This is a stock running on the future right now. And sometimes Tesla goes through these periods where it's very focused on the short term. Certainly 2022 was one of those time periods, right? Very, very focused on the short term, and even the beginning of 2023. What are the numbers, the projection? Right now, people aren't paying attention to that, right? We've been in a risk-on market for 2 years. A lot of people are excited about Elon and the future and America and robots and AI and self-driving vehicles. And so they're just willing to pay huge premiums for a company that's in the forefront of a lot of those technologies. And so the conference call is what ends up mattering. And so if you're wondering, is Tesla stock going back under 400 after earnings, or is it heading up toward 500? It's all going to be dependent upon that conference call. If investors love the conference call and they walk away feeling jacked up about all these big opportunities, the stock will hold well. If people walk away from that conference call and they're like, I don't know, man, I don't know about the future of Tesla, the stock will go down. It's a freak stock. It's very, there's certain companies that are freak companies. Tesla's one of those, where people are willing to look past the short-term numbers and say, I'm investing in this because of this next 20-year opportunity. That's Tesla. Most companies don't have that liberty. When I say, it's a freak company, I'm talking about they're one of maybe 5 or 10 companies in the entire world that have the liberty to have the investor base not really focus on the short-term numbers and be like, we're going to do this massive thing, and people say, let's go. I want to own the stock because this massive thing we're going after, that's $1 trillion opportunity, whatever it is, right? And that's Tesla, right? And so, I hold my 1,000 shares in the public account. I got a position in the Patreon portfolio. But at the end of the day, I hold Tesla shares a lot of times nowadays just because of, I'm just like, what if it happens? Like, what if they are the biggest robotaxi player in the world and that's some massive profit? And what if they are the leading robot company? It's much more of a bet on that nowadays for me to hold those shares than it was back in the day. Back in the day when I was buying Tesla stock heavily in 2018, 2019, there was a bet on numbers. There was a bet on math. There was a bet on valuation. And that's why I invested so heavily in Tesla stock, and I call my house the house that Tesla built, right? And it was game-changing stock, incredible. But it was a very different bet back then. It was on numbers and math. Nowadays, people are not placing bets on math, really, in my opinion, in regards to Tesla. They're placing bets on, excitement and hope and what it could be in the future. And we'll see, right? But you can't even run math right now because we don't have things to run math on. You can't run math on like let's say you can't run math on robots. Like you just can't. You can't run math when there's a product that's not even in the market, and we don't even know what the demand will be or won't be. When I was running my math back in the day on Tesla, and it was such an incredible investment opportunity, that was because we had cars in the market. And so I was able to run numbers and say, okay, if we can make this much off each car and then increase some margins to this, and average selling price would be this, and we do this number, right? And I go in the energy business, and I'm like, okay, if this business could be valued at this because we do this number, because we had actual products out there. These products that people are trying to throw numbers at right now, we don't even have them in the market. Like robotaxi is not even in the market, right? Robots aren't in the market and won't be for a long time. And when that does happen, we can't run numbers because we don't even have anything to go off of right now. So it's like it's a whole different ballgame in regards to good old Tesla, my Tesla, and, but it treated me well, man, and the amount of profits I've taken on that stock over the last number of years, jeez, crazy, right? Or the Planet, that one's all about the Florida, what happens in Florida, that one's a hard one to predict. The Vegas store is doing very well from what I see, but Florida is completely up in the air right now. Celsius, I don't have an opinion on Celsius in the short term. I think this company sets up well for the long term, but short term, no opinion. PayPal. Let's get into PayPal. I do have an opinion in regards to PayPal. So 2 of the past 4 quarters for PayPal have been double beats, right? So last quarter they missed on revenue. Previous quarter they double beat it. Previous quarter they missed on EPS. Previous quarter they double beat. So we should come through with a double beat in this quarter, right? If the pattern is the same. No, here's the deal. Beats. We're beating on EPS in my opinion. That's in the bag. Next quarter's in the bag in my opinion as well. There's the whole honey situation. That's going to be a drag on legal expense. There's no doubt they're going to have to spend litigation money on that. I just don't know how much. I mean, maybe legal fees are $50 million, or maybe they're $250 million on that. Whatever the number is, it's not that big of a number for PayPal in the end, whatever they end up spending, right? As far as revenue goes, I think that's super in the bag. 3% revenue growth for this past quarter is all they got. Analysts have 4.1%. I think those are super in the bag, in my opinion, in regards to good old PayPal. So if this company quad beats, I think we're going over $100, which would be very exciting because it'll be the first time PayPal will be over 100 in a long time. A long, like Donkey Kong time, okay? Stock's been a sneaky gainer for us now. Look at this. We're up almost $85,000 on this stock. Almost $85,000. It's been a sneaky gainer. So, yeah, I'm feeling pretty good about PayPal. Conference call should be pretty good. Alex Chris seems like he's got the company really dialed in. I think it sets up very, very well. Fubo is just waiting on that deal to happen, right? Like, that's the thing. Like, the numbers are almost irrelevant that Fubo reports. Like, cool. Like, if they grow revenues and, losses come down, all that stuff, like, cool. But at the end of the day, like, it's all just waiting for the Disney deal to go through. Once that Disney deal goes through, rocket ship ride, right? And the closer we get to that time, I wouldn't be surprised if you see more and more momentum come into Fubo stock, right? But as far as me right now, I got those 20,000 shares in the public count, up $27,000, and I'm just holding for now, right? Holding for now. As we get close to the deal, I might be more and more incentivized to buy more shares of Fubo, but it's a speculative position, right? It's a speculative position. Once a Disney deal goes through, suddenly it becomes like not speculative at all, right? Then we're talking about a company that they're talking about cash flow positive from then on out. Like you completely change the game in regards to Fubo. Like when we start talking about Fubo after the Disney deal, stock probably goes 10 plus and never comes back, or at least doesn't come back for a long, long time, right? Next one up here, Elf on a Shelf. Excuse me, Elf on a Shelf. Woo. Elf. I know a lot of people have been wanting me to talk about Elf. Well, listen, let me say this first off, right off the bat. Sometimes, like, I don't have anything to talk about. Like, with Elf, right, we're going to talk about their numbers right now, but there just hasn't been a lot to talk about. Like, what am I going to talk about in regards to Elf? Like, all the price action? Like, I like to talk about stocks when analysts are coming out with these upgrades and downgrades and things like that, right? And when earnings are coming out. Or like I'm very actively buying a stock very heavy at a particular time and I think it's a great opportunity. That's when I like to talk about stocks. But when it's a company I've made fortunes on and there's really no news, it's just price action moving around, like what am I going to talk about? I'm not a technical trader. I'm not going to break down the technical crap. That's all complete garbage. We know that, right? Technical mumbo jumbo. It's a joke. It's a joke, right? Show me one guy that's ever made consistent money in that. Yeah, never happened, right? Elf on a Shelf. It's an ancient stock for me in the public count, up 1,502%. I'd love to see some technical person ever make 1,502%, and they can't. Ancient stock in the public count. So when it comes to Elf, right, here's the deal. 15 straight double beats for this company. 15 straight double beats. That's incredible. No technical analysis is going to show you that, right? Incredible. Nuts. No, as far as Elf on the Shelf, likely beating. Next 2 quarters, revenue, 21%, 18%, likely beating as well, right? Maybe this is a one time that, the haters of Elf will get their chance to finally, they finally missed, and they're going to celebrate like crazy. I think it's a hard company to bet against, is it not? I think it's a really, really difficult company to bet against. Maybe you can get lucky and it's that one time they miss. Good luck with that. But the thing we got to understand about Elf right now in the short term is a lot of the focus is really on China and tariffs, right? What's Trump going to do? Is Trump going to put on 25% tariffs on China and these products, 50% or 70%? We don't know. And so that just leaves like a cloud in the sky right now that we're like, is that cloud bringing us rain or is it not? We don't know. And so that's kind of going to hold ELV back a little bit in the short term, in my opinion, until there's more clarity from what Trump is up to with those China tariffs, right? Because you've got to understand such a significant amount of ELF's products are made in China and then shipped to the United States. And yeah, I mean, there's no doubt, like if big tariffs come on, they're going to have to make changes, right? And do this or do that. We'll see in regards to that whole matter, right? As far as Honest goes, stock number 19 up here. By the way, Avant, I don't really have an opinion, although I'll say this about Avant. If you look at their numbers, they've been increasing and getting so much better. So bravo, Avant. It's a super small cap stock I own, but they've been getting a lot better with their numbers. And so, you know, I hope they just continue to do what they do, but I don't really have an opinion on that one. Honest, I do have an opinion on. Here's the deal with Honest. 4 of the past 4 quarters are double beats for this company. Earnings per share, quarter in and quarter out, beats. Revenue, quarter in and quarter out, beats, right? Carla's running this company on a high level. CFO, this came out about a week and a half ago or so. The CFO is going to be retiring. Was his name? Dave Loretta over there. So, like, you know, they're going to have to replace the CFO at some point this year, and he's done a heck of a job. But, you know, Carla, Kate Barton, those folks are really the ones, in my opinion, at least, that are really running the show over there and really gotten this company to increase their margins dramatically, revenue, and obviously profitability. As far as these quarters go, I think they got them both in the bag. I don't think Honest is a money-losing company anymore. I really don't. I think they're going to break even or make profits every quarter from here on out. And so with the negative 2 cent like money-losing quarter, I don't think that's happening. I think they're going to be either break even or profitable every quarter from here on out. That's what I expect for this company. And so these quarters, I think, are in the bag, at least in my opinion. As far as revenue growth goes, 6.7%, they got that in the bag. Next quarter, 7.8%, they got that in the bag. They're going to beat, in my opinion, in regards to that. So, Honest, I think after earnings goes $7 plus, right? And I do believe there's a decent probability that stock could go $10 plus before the end of this year, right? So I think we're looking pretty good as far as Honest goes, right? Now, all this stuff going on short term, all these earnings, things like that, make sure you guys stay focused on long term. We got to pay attention to these companies' earnings, the conference calls, all those sorts of things, but make sure you guys always stay focused on building a great portfolio that you love for the long term, right? That is so vitally key. Members of my private stock group, they do that. They've been well trained under me. If you want to be well trained under me, click the pinned comment down there, fill the forum. Let's take your investing game up to a much higher level than where you're at right now. So you can hopefully get to 6 figures, multi-6 figures, 7 figures, multi-7 figures, 8 figures, right? Once you hit the 6-figure club, we send you one of these to your house right here. The Diamond Award. It's a beast, man. And then once you hit 7 figures plus in your portfolio, we send one of these big dogs to your home. This is a 7-figure award. And then once you join us in the private group, send you your 2025 Steel membership card. And then 1000X Steel membership card as well. Alrighty, guys. Appreciate you joining me as always. Much love and have a great day.